Good morning, ladies and gentlemen. Thanks for tuning in to Pre-Market Prep. We got a good show for you here today, Tuesday, September 23rd, 2025, the Nvidia OpenAI deal. We did not get a chance to talk about this yesterday because the news was midday. Seemed like the news ignited a lot of the chip stocks. We had some odd price action in Google around the time of this news. We're also gonna use the chip talk to get a little preview for Micron earnings, which are going to be tonight after the close. Disney bringing back Jimmy Kimmel. We'll talk about what this might mean for the stock. Eric Jackson with a new stock pick. Better. Any implications for Open Door, we will talk about. We have some news in the quantum space here this morning with IONQ. The quantum theme continues to be real here in the stock market. We'll talk about some price action in KVUE last night. Crowded trades 101, according to Dennis. We also got AutoZone earnings here this morning and a few rating changes. Our guest at 8:35 a.m. Eastern time, Ryan Craver of Commerce Canal. We'll talk to him about a number of retail names. Folks, let's get it going here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, let's take a look here at S&P 500 futures trading down just a couple of ticks, around 67.50. Take a quick look at the Qs here, QQQ. Wait for my Thinkorswim charts to load here. QQQ 602.20. Let's take a quick look at gold. Gold here this morning trading up to around the 38.20. Let's call it 38.15 per ounce level. That's up about 40 points or so. What's left here? Oil, crude oil trading around the $63 per barrel level. And one more here before we get triple D. Let's take a quick look at Bitcoin. Bitcoin trading up about 0.7%. That's about $800 around the 113,000 level. Pull my charts off and we will bring Triple D into the mix. Good morning, Triple D. How are you feeling today?
I'm okay. Still fighting a little bit of whatever the hell I had through the weekend there. I feel like it was COVID per 10. A little bit better today. So I'm coming around. I'm not on Advil anymore, and that's a good thing according to Trump. So that's the good news. The bad news is I'm still a little bit stuffy, still a little bit nasally, still a little bit not myself.
You actively stopped your Tylenol usage based on the info we got yesterday.
Said it, I was like, I gotta be done with the Advil and Tylenol. No, just kidding. Because I'm not pregnant, so I'm okay. I'm not pregnant, but yeah. I mean, that was an interesting press conference yesterday. We could start there where let's
start there.
Here, but
sure, why not?
We brought it up here. I mean, the one benefit. I mean, Trump's obviously on there and saying, "Why take it?" The benefit to obviously taking Tylenol Advil makes you feel better because I had the worst headache over the weekend. I tell you, the Advil was very much keeping me able to function because I would have just been in bed without Advil. So there is a benefit to it, but. I mean, obviously, we saw this press conference yesterday. They feared the worst for Kenvue going into this because the stock was down, at one point in time, 10% yesterday, was down, obviously. I think we might have just lost the Brentster, was down, obviously, 2 weeks ago when the Wall Street Journal rumored that this was going to happen. So this isn't just like all of a sudden, this is selling off on this news. This was rumored by the Wall Street Journal at the beginning of September. The stock went from $20.69 down to $17 that day, as it was rumored that the Trump administration and RFK Jr. were going to link Tylenol to autism. And, so now it's been a consolidation station for a couple weeks. Then we get the actual presser yesterday. And I think it was kind of a relief pop. So crowded trade 101 here, where a lot of people short saying, okay, this is going to be the death. I even had my mom text me, this is over for Tylenol with Trump saying that. I mean, very crowded trade to the short side. And so now you see, whoa, stock's up 5%. Just crowded trades 101. So taking it the other way. I also think like the presser itself started with Trump mentioning, obviously, Tylenol and the linkage there. But then, he went on a long tangent on like not taking any Advil, aspirin, all bad for you, don't take any of this stuff. And then he started talking about vaccines and he went
Vaccines in
so everywhere
general.
else
He
that
didn't
it almost lost focus. And the stock and
definitely
Kenvue started rallying on that. Now then
like right
RFK
then.
Jr. came
Yeah.
on, brought it back to focus. Stock sold off a little bit there, but I think at the end result here, I don't think for Kenvue it was as bad as a lot of investors feared.
Mm-hmm.
Bottom line.
Yep, I think we had a good read on it last night. I loved your take on Crowded Trades 101. This is a good way to, take a relevant news item and make it a little educational here, give you a little bit of an idea.
Yeah. It's not as simple as, oh, it's going to be bad news. They're going to short the stock. Well, the stock was already hit down, from 21 down to 17. So you're talking stock was down 20% in this. And really, when you hear about RFK Jr., he's not advocating that nobody take Tylenol ever again. He's advocating that pregnant women don't take Tylenol. It's already,
Yes.
known that they shouldn't take ibuprofen. So
Right.
is there truth to this? This is being disputed. It's all over the internet saying, there's doctors coming out saying there's no scientific proof to this. I'm not a doctor. I'm not going to comment on any of that. I can just tell you that I think KVUE, shareholders that were really concerned had a little bit of a relief pop last night.
Major
so that's
move.
KVUE story.
We got it out of the way nice and early, Triple D. You want to go to Nvidia OpenAI deal from yesterday?
This was more exciting yesterday. So this news was announced. Give us the news here, Brentster, from yesterday.
All right, so right at 12:01 p.m. yesterday, Nvidia out with the press release yesterday saying that they are going to be doing a partnership with OpenAI. There was an investment component there. Do you remember what the investment component was? I'm still finding the press release. I think it was like $100 billion, Triple D. Is that right?
Yeah, 100 billion, I think. Yep.
Yep, $100 billion. And so again, this press release was right at 12:01 p.m. Eastern time. See if I can drill in here, and you can see maybe that that Nvidia shares didn't start moving until 12:01, and they moved sharply about $10 higher. And implications around the entire chip space here, right, Triple D?
Yeah, for sure. This ignited the chip space. So Nvidia was kind of a sleeping giant here. It had been consolidating for the better part of 2 months. We hit 174 in July. Yesterday, when this news was announced, the stock was approximately 174. This news got announced and the stock quickly popped 10 points to 184. And now you look and you think, now there is some resistance up here. We're right butted our heads and made new highs up here. So if you're just looking from a longer term chart, you're still at major resistance here, but we kind of hit it pretty hard. So we put a crack in that ceiling yesterday. I kind of think we did. And I think this could be the catalyst. Like, I know we're leaking off the highs, but I think this could be the catalyst to take us to 200 by the end of the year. I'm still long Nvidia in the long-term portfolio. It's still the best way to play AI. They're still in the pole position here. I don't think there's any reason to get, fearful that, just because it's trading 40 times earnings, that everybody's all of a sudden going to sell it here. So I think it put a crack in that ceiling of resistance yesterday, and I think eventually we break through.
I like how you said that. And 185.43 is that high we would keep an eye on in Nvidia. And I don't know if you want to take a quick look at this, but there was some really odd price action in Google around this time. I think it was Mr. T in the STN chat was like, "What's going on in Google?" And if you can't see the
good sell-off.
Yeah, and this sell-off right here that I moused over is at 11:30. The Nvidia news didn't happen till this dip right here. So some kind of weird, like, I don't know, maybe anticipatory move in Google. You would think that Google would move on this. It did seem like it did move on this when we had the Nvidia press release, but it was all very delayed and kind of like clunky. It was a little odd, in my opinion.
And the market here, it's hard for these darlings to sell off right now. I mean, just look at the Google chart daily, go out a little bit longer than that. This has just been the steadiest climb. There's not a lot of major dips in here whatsoever in the last 2 months. So, I mean, this has been the gap and go from the earnings report, and the stock continues to just show a lot of life here. And I mean, this is what we're at. Like, we're in a bull market, folks, and we're in a bull market for a lot of stocks. And Google was a laggard for a long time. And hey, I'm going to be the first to admit, I have not been on the Google story whatsoever. I missed this one because I thought that the search was being attacked. I thought with chatbots, I actually sold my Google a year and a half ago because I was concerned about the cash cow of the search. But you know what? Same thing with Apple. They're just not concerned. Now you're getting valuation and multiple expansion happening here too. So, I mean, a rising tide does lift all ships, but the Google story, which was ice cold 3 months ago, is hot again here. So you can't argue with the technicals. The technicals say buy dips.
Triple D, let's keep it on the chips here, and we'll go to Micron. We're going to have Micron earnings tonight after the close. Is that right?
Correct. It's going to be a 17-point expected move here. Bar is super high, as Jay Rice was pointing out in the chat earlier. I've pointed this out as well. It's run from literally starting September 120 to 160. So we have had an incredible pre-earnings run here. Been some other catalysts in there, but some ratings, but some news. There's been some stuff in there. Bar is really high. The one thing I will say is Micron is an AI darling here now. And any dip probably gets caught up with institutional money managers who are saying, oh crap, here's a dip. I need a dip because I'm underinvested. I mean, when we hit seasonality, which we're going to have Tommy Lackey in the STN room talking seasonality today. When we talk about this, you start thinking September can be a seasonally weak period for stocks. That has not really occurred. So seasonality has kind of failed here as well. So, I mean, if you were expecting this big pullback and this big buying opportunity in September, and you're a money manager that's underinvested, you're like, oh crap, here I am, underinvested, underperforming, concerned about my job. I'm going to be looking for dips to buy, especially on AI names. So that's why I think even on a dip on Micron, if it dips, that's expected move of 17 points, I think there will be a lot of money managers ready to scoop up that dip. So despite this having, if we're in normalized markets, I would say, yeah, high bar, stay away. I will say the actual opportunity is probably to buy this thing into the report. Yeah, this is shocking that I'm saying this, because if it rallies, it probably gaps and goes. If it sells off, the dip probably gets bought. Now, I do think it's going to sell off. I think I'm inclined to buy the dip, though. So I think this gets down maybe to 155, 150 in a worst case scenario, I think, in my opinion, because that would be just around the expected move from 166 right now. I think money managers will come in unless they say something devastating, and I don't think they're going to. I think the business is going to be humming along. I think dips get bought. So I think risk is actually that this could go higher.
Right now, analysts looking for 286 in earnings on sales, just over 11 billion from Micron. When we hear about Micron tonight, and something else to consider here, Dennis, is that we haven't had any guidance or earnings, as far as I can remember, from other players in the memory space recently. So maybe that also is contributing to some of that pretty large expected move. We don't really know where Western Digital, we don't really know where Seagate or SanDisk are. Micron's kind of reporting in a little bit of a vacuum here.
True. You want to go we're through earnings season. This is the end.
Yep.
Micron kind of ends it. If we go Accenture, Costco. Now, Micron kind of ends it. This is kind of like the last big tech darling name, and that seems to be every earnings season. Micron's always late in the earnings season. Oracle always late. Micron always late as well. They kind of end it, and then obviously we get into a 2-week period. We have no earnings, and then we start to get into Q3. So and obviously the fourth quarter here. So yeah. So I'm just going to reiterate here. I think we're at a point here. It's a quiet week for earnings, so there's a lot of people watching this one, which makes me even think more. There'd be a lot of money managers watching this stock specifically here, and that's why I think the dips get bought. I will be trying to buy the dip on Micron if it comes down to 150.
All right, Triple D, we're rolling along with our topics here. The next one we're going to go to is a little bit of a controversial topic, but we should talk about it. Disney is bringing back the Jimmy Kimmel live show. We kind of want to focus on what does this mean for the stock. We were talking about it a little bit in the STN room last night, Triple D, and we were you and I were talking about. We were kind of talking a little bit about it with the room also. But I think you had an interesting take on this. The back and forth that we've had here with this news. Disney took Jimmy Kimmel off. They're bringing him back now, apparently. I think it's going to be later this week. The back and forth, it just doesn't really jive well here.
I think
the indecisiveness.
I think they've screwed up big time here in both cases here. So maybe they jumped to conclusions too quickly to cancel him, but bringing him back too just shows that they don't know what they're doing. So let's just stop. forget about the politicalness just for a second here. Like if you agree, if you'd like the Kimmel, what he said, you don't like what he said, whatever. Don't worry about that. But what Disney has done has successfully, with this Kimmel situation, pissed off all of the left by canceling him, or at least suspending him. And now they have successfully pissed off the right by bringing him back. This is like exactly what not to do. You just pissed off everyone. So there are people that are canceling their Disney. The left is out there canceling their Disney Plus because Jimmy Kimmel has been suspended. Then they see, oh my gosh, all these cancels are pages crashing. We better bring them back. They bring them back. Now the right's going to go and start canceling Disney Plus too. Holy crap. Mismanagement here all over the place here. So whether you like what he said or you don't like what he said, I don't care. But as a shareholder here, I'm like, what in the hell are they doing? They just successfully pissed everyone off, and they're going to get more cancels. The right's going to start canceling now.
I know.
Holy crap, man! What a crap show, Disney.
This thing has been happening in the background a little bit, you know, in our native land here of YouTube. I'm pointing over at my YouTube here that I'm looking at, but in YouTube comments, if a video is mentioning Jimmy Kimmel, there's like an attack, I would say, in the comments of people, especially overseas people, it seems, saying like, yep, I just canceled my Disney Plus. So there is definitely backlash here that maybe not a lot of people out there on Wall Street know about, but it definitely is happening. Are there going to be implications for the stock? That remains to be seen. But as you're suggesting, Dennis, the sentiment in Disney is just pretty darn low right now, I would say.
I would stay away from this stock as far as possible. Now, I know like the stock really hasn't even responded much to this Kimmel stuff. It was down a couple bucks the other day. It rallied a little bit last night. There has been a lot of response here. But I mean, I think some of these Disney Plus cancellations are real. I don't know if it's true that the site was crashing, but it isn't great news. But if you think they're crashing Disney Plus and they're just going to pick on Disney Plus, no, so people may not go to the parks. People may take it a step farther and say, I'm not going on my Disney cruise. I'm just going to boycott Disney altogether. I mean, it's not good. This is why you got to stay as much as you can politically neutral, no matter how strong your opinions are one way or another, because you can't afford to cut off half your customer base. And, you know, Disney's been, you know, they think they're siding with the left. They think they're siding with the right. They don't know who they're siding with. Start going in the middle. You know, stop being so, you know, like going one way or another. You got to be in the middle if you're running a company here. I mean, that's just the way it is. So when half the country's Republican, half the country's Democrat, and you say something that's really far to the left or far to the right, you piss off too many buyers. So you got to stay more in the neutral.
Dennis,
I'm shocked that the stock is where it is still, really, $112. I guess it's the rising tide lifts all ships, but let's just talk the stock technically here right now.
Sure.
Let's not even worry about what I just said, which obviously when I'm making a stock prediction, I try to like use fundamentals and technicals here. This stock has had trouble at 120 for years, not just for years, for like a decade, not a decade. Since 2021, 2022, 120 back in 2022, multiple highs. 123, we kissed it a little bit, fails. 124, get up to over 124, 125, fail. When we fail again, same dang price, 124 and 125. Now you see this whole inverse head and shoulders thing starting here. And I'm like, man, this thing's got some problems here. And if it loses 110, this thing could be back on $100 in a heartbeat here. So I think it's just technical trading 101 here too. Chart doesn't look great. We've had, you know, a very strong market here and Disney not participating in it whatsoever. And now you got all these Disney Plus cancellations. You have all this other stuff happening. I don't know if there's a catalyst to drive this. Lower earnings are ways away here, but I've got to think that none of this, you know, situation with Kimmel was good for the stock. Brentster will be back here in a second. He's just bouncing around.
I'm here, so my...
He's just saying hi. Ryan's in the background here, too. We got Ryan Craver coming up here very soon. And we can bring Ryan on sooner, too. Ryan, you let us know in the background, because if you're ready to go, we can bring you on in a couple minutes here. So give us a thumbs up when you're ready to go, because I don't like making our guests wait here either. So sometimes...
And no pressure also, early. Ryan. Back there.
Yeah. Hopefully you give us a thumbs up if you're ready, Ryan. If he's ready, we can bring him on in a few minutes. Otherwise, we'll wait. Oh, he is ready. So we're going to go.
Give us a thumbs up.
Well, let's bring him in here. I mean, Disney's not a retail stock, but we can bring in and talk some retail stocks. So get that intro going. Let's bring in this Ryan Craver guy. I like it. Mr. Ryan Craver, retail expert here. What are your thoughts? You follow this Kimmel stuff. I want to get your thoughts on this
I think at the end of the day, the subscriber growth is just not there. So it's a moot point, right? I mean, they successfully pulled in Hulu. Their ad load is nowhere near where it needs to be. I mean, the only one that's successfully transitioned to an ad-based model is arguably Netflix and maybe even Amazon, but they're using the Prime membership to push that. So I don't know. I can't get excited about Disney in any way.
Yeah, so you're not a buyer here either. I don't know who's a buyer. That's why I'm not excited about it here either. What are you excited about? Let's move on from the House Mouse. Move into what you're excited about, because what we've seen happen over the course of the last 4 weeks is that we're starting to see life in a lot of stocks that didn't have life before. XRT has started to move up. Some of the retail stocks have started to move up. We know the Costco's and the Walmarts have always performed, but we're starting to see life in other retail names here as well. Not in all names. Target continues to go down every day, but we can get to that here too. But what do you like here, Ryan?
Best of breed continues to be where I would want to put money. I mean, I think Costco is very interesting because we've spoken about Costco being at valuation that we could never ever afford, yet it continues to rise. However, more recently, it's come down pretty considerably. I mean, the high was close to 1080 or so, and we're down at like 943. They continue to be the best of breed. Yes, forward multiple still very, very high. I think it's like 45-ish. But it is the best of breed, and it continues to have that moat with the membership base. Target, terrible name. Absolutely
this
terrible
just goes
name.
down every day. I mean, here we are, we're in a bull market, and a rising tide lifts all ships unless it's Target. I mean, this stock goes down every day. What's going on here?
So we had talked about for probably the last 2 or 3 years, taking out Brian Cornell as CEO was probably the catalyst to grow it, but they took him out and kept him as chairman. I think bringing in the old guard, someone who's currently already been in the Target ecosystem for near 2 decades is not the answer. Target needs to grow through its digital offering and do exactly what Walmart's doing. Walmart is funding the business through increased advertising. Increased advertising brings increased margins. Now, the other weak point for Target is that not only are they not growing that digital presence, they also still continue to lose more and more market share in the grocery business. The grocery business is the most repeatable business. And in previous years, when they've had grocery weakness, they've had the apparel business to try and float the boat. And that just has not performed either. So again, I can't get excited about anything Target-wise. There's no international growth story. The U.S. continues to be weak. So I think that they're probably in a place of finding stores that are underperforming and closing those stores.
So this continues to remain value trap in your opinion, because everybody's always talks about Target, the cheap multiple. The nice dividends, 5.25% here now. People will jump in for a 5% dividend. Do you think it's still too dangerous probably to get all excited about that 5% Target dividend?
Still not excited about it. Can't be excited at all.
It goes down 5% every week. Stop.
Exactly. There are some interesting things in the traditional retail space. So I don't know if you saw Macy's, but they've done a couple of interesting things. So when we have spoken about them previously, it was all about finding the stores that were underperforming and shutting those stores. And they've continued to do that. But they have now signed a deal with Amazon, the devil, that they called the devil for many years, in which they will be doing advertising, reciprocating advertising on their various sites. I think that's very interesting. Do I think it's something that's going to save this one long term? Most likely not. I think it's going to struggle for the considerable future. But I think if you want to look at it for a potential trade, I think it could be something interesting.
Well, there's a good point here. I mean, Macy's, we were talking about some stocks showing life here. I mean, Macy's and Kohl's for that matter. I don't know if this is the retail army getting behind it there. I know I saw it as a meme stock, and the stock actually had that ridiculous pop from 10 to 20 in one day in July. Is this like, this meme stock stuff just starting to spread into retail names? Is Macy's part of this too? I don't see that, but if they're buying Kohl's, I've always thought Macy's and Kohl's kind of the same. We used to pile Nordstrom in there too, but now Nordstrom's off the board. So I don't know. What about your thoughts on Kohl's? Has Kohl's got life here?
Kohl's, I don't think has life either. I think it goes back to where people are bringing their wallet share. The wallet share is going online, so we don't need to talk about Amazon and all the rest of those guys. But where the names are successful would be in the off-price business. So TJX is, in my opinion, best of breed. They have the international story. They still have comps that are growing in the US. They have been able to weather the retail storm without any e-commerce, and they're doing it in a very profitable way. TJX is a great name. I think if we see it not trade down below that 135 number, I think it's definitely one that you put into your portfolio longer term. Other major players would be Ross Stores, which I'm not nearly as bullish as TJX, and then the other one would be Burlington.
Yeah.
And Burlington has also struggled. So if you pick one of the three major off-price names, I think it's definitely TJX.
You've been all over this too, Ryan. The TJX trade, so congrats on that here. And I agree with you here. I think sometimes it's just like go buy best of breed, and TJX has just mastered this off-price retailing here for years. I mean, this stock, there's a reason that this stock has just been straight up for 7 years, and every other retailer seemingly is left in the dust. Obviously, Walmart, and Costco have done well, but I mean, so many retailers have struggled. This has not been the case with TJX when you go out to that longer term chart. $60 back in 2021. We're now $140 stock, and just continues to execute. You go into those stores, the foot traffic is busy in there. People are buying stuff. People want a deal. And you feel like when you go into TJX, I feel like I'm getting a deal.
Yeah, you're absolutely right. And I think that there was a fear over the last couple of quarters that the dollar stores would steal more and more business as they crazily started charging more than $1 for some of their products, but they've struggled. They have not gained the additional market share. So I still like that name.
What about Dollar Tree and Dollar General? I mean, they're not exactly the same here because obviously one does a lot more grocery than the other. But I mean, Dollar Tree, let's start that one, DLTR, because this stock got absolutely murdered for about 3 years here. And I don't know if it's like what you're saying, breaking that buck that really did it here, but went from 170 down to 60. Had an awesome rally from the April lows here. Like we have come off the lows in April. We went from 60 to almost 120, almost doubling for a dollar store. Now we're peeling back. Now we're giving some back here. Was that just like the rising tide lifts all ships and this Dollar Tree still stay away from here? Or is this recent dip an opportunity to get in? What are your thoughts here on Dollar Tree?
Yeah, so Dollar Tree surprised the market. Everyone was quite bullish headed into earnings, and it dumped. It completely dumped, and nothing within the story told me that they're going to be able to reverse the course. I think it trades all the way down to 70 range. 75 range. I think that if you look at the insiders, they've been picking up some shares, the management team, but I don't think that gives me enough conviction to warrant an initial position now. I think it trades into the 70s, and then you maybe look at it.
Continuing on this theme here, AEO, EKS. Obviously, the Sweeney situation really ignited the stock here. Stock was hot as hell, even got a mention from Trump a while back, starting to cool off in the last few days. So what are your thoughts here? Is American Eagle dip to be bought? Have they turned the story around, or is the Sweeney pop eventually just start to like leak back here? Is this a turnaround story or not?
Classic case study of any PR is good PR, right? It gave it the bump. I think the forward-looking numbers actually look quite good. They look quite strong relative to where they were before. The trick is it going to hold this 17 level, or is it going to drop below 17? I think it trades down to 17. You steer clear, but if it holds this 17 number, you're probably okay to take a trade.
What about the brother-in-law Abercrombie and Fitch? Because I always used to pair trade these two together, ANF and AEO. And this was a stock that was a darling back in 2024, and it's fallen off out of favor here too. Stock's down 100 points from where it was just a year ago. definitely trying to find its footing here down here in this 80s, but it's leaking again too. Is there a turnaround story here too, or you'd stay away from this one as well?
I wouldn't stay away from this one. I would just watch it pretty closely. I think it's going to trade sideways for a while unless they come up with another catalyst. You're totally right. It lost its shine back in late 2024. They didn't have a great Q4. They didn't maintain their impressive double-digit comps year over year. So I think it's probably going to trade sideways, but I also don't think it's going to trade all the way back down to that low 70s, high 60s.
Okay, a couple other ones. Canadian darling Shopify here, and this has been a stock that you've been all over too, and the stock has been an unbelievable mover, basically over doubling from the April lows here. We're not quite back to all-time highs, but we are very close. We're up to 176 at the end of 2021. 2022, we got down to $23, and this has been a hell of a buy if you bought this in 2022, 2023, 2024, even 2025 earlier. This has been a hell of a run. Is it time to book profits in Shopify, or does the story continue and do we eventually see all-time highs?
I think, as you know, our core business is we run websites and Amazon stores for brands. I can't tell you a time in which I've heard of a client moving away from Shopify, or if they're leaving a Magento, which is Adobe, or some of those other platforms, not going to Shopify. They continue to gain market share. They continue to see their GMV increase. This name is still strong. I think it clears this position here and it makes its way all the way back up to 180 eventually, as long as the market's going in conjunction with it. It is the strongest overall website platform, e-commerce platform in terms of developer base. It is going to stand the test of time, in my opinion.
Ryan, what about a couple of the apparel names here, like a Nike or like a Lulu? What have you been feeling about like a Nike or a Lulu?
Nike, if it holds that low 60 number, I like it. But this one's going to be one that you're going to have to hold for a while, right? So they had supply issues, inventory issues. They've clearly started to manage those more accordingly, but they need to get some hot items. They really have not gotten back to the position where they were the name to beat. They're also seeing a pretty resilient Adidas. Adidas is doing a decent job. As Adidas has shed the underperforming brands like the Reeboks of the world over the years, they have focused in, cleared through the Yeezy, Kanye play, and they're very, very strong overall. If we talk about Lulu, I'm wearing Lulu right now. I'm not going to lie. I have looked at nibbling. I have looked at nibbling it. But if I just take the objective look, they ran on the highs of moving into the men's market for a couple of years. They ran into the highs of U.S. comps continuing to be strong. They are trying to run off the highs of the comps being strong internationally, but it's still just not large enough as a percentage of the overall pie. I am desperately waiting for a bottom. I don't know if we've seen it yet. It looks like we're getting quite close, but even if we do see a bottom, they still need some sort of catalyst. I think that they must be in the halls of Vancouver talking about potentially looking at some licensing deals or potentially looking at another transaction to buy an additional brand to become a brand house. But until they have some sort of story like that, I think it's never going to come back to that 500-ish level.
I mean, some people were comparing it to Under Armour. Is this like another Under Armour where, just valuation multiple contraction has happened here? Because Under Armour, if you go back to 10 years ago, was the story. Everybody was going to buy it. And obviously, the brands, some of these brands get so hot for so long, and then people it's like they move on to something else. And when you're a one brand thing, just like you were saying, maybe you need to get into another, purchase or something to like diversify themselves away. But I mean, one thing I look at, I just see like my thought process is I just look at Lululemon as a consumer and think it's expensive, and sometimes maybe we're not in that realm. Like we were just, saying how good TJX is because I want to get a deal. I don't feel like I'm going to get a deal when I go into a Lululemon.
Yeah, so Under Armour, they brought back Kevin Plank. They thought they'd have a founder-led organization. They may be able to push it a little bit harder. Clearly, it hasn't worked. I think the big difference between Lulu and Under Armour is Under Armour has a store count of, I think it's 170 stores or something like that. They've never built that to be strong enough to drive the overall business. So they're clearly reliant on their ability to push more and more products through companies like Dick's Sporting Goods and other places. And that business has just never recovered. I think worldwide they have 400 or so stores, but it's never going to be a name, at least at this point, that I would consider. On the Lulu side, they've tried to do some similar things where they've pushed wholesale through to ski resorts into some specific specialty type stores, but it's still not big enough as a percentage of their overall business. I don't think it's going to go anywhere near where Under Armour is, just because of that cloud of the store base. But they are seeing a lot of competition in many other brands. Alo, Viore, all of them are coming after them, and it's no longer a differentiator to show these 3 stripes here showing that you're wearing Lulu.
Right. Ryan Craver, founder, Commerce Canal. Thanks for joining us as always, Ryan. Always giving us lots of good wisdom and knowledge, keeping us updated in the retail space. Thanks for coming on today, Ryan.
Thank you. Have a great week, gentlemen.
Awesome.
All
Thanks,
right, later.
Ryan.
Cool, Triple D. We were about to get to, I think, the better story before we had Ryan join us. Better Home and Finance. The ticker is BETR. Triple D, had you heard of this stock before yesterday?
No, I'd never heard of this company here. I'd never traded it. I don't think I had ever heard of it. So it was small float, low float name. So what happened is at 9:30 a.m., Eric Jackson tweets out. We know Eric Jackson, the open door guy we've had on the show. Tweets out, got a new stock pick. It's BETR. The stock, algo's just all over it. Halt at limit up. So it goes from like 34 to 36.70, and then it's halted limit up. They did not.
That's right stock here in just this little bar. Yep. That was just this little bar right
halted
here.
Limit up on his tweet. They did not get the stock reopened for an hour after that. They could not figure it out because there was so much buying pressure here. Just from his tweet. Stock reopens at 72 and runs to 94. That is unbelievable move. You cannot argue with the Eric Jackson effect here. It was real and it was powerful. Stock obviously is leaked, and come back all the way a long ways back in. Now it's starting to drift up here again. One thing I will say is Open Door was very weak yesterday, and I do not think it's a coincidence that he tweeted out a new stock, because the market has viewed Eric Jackson as the Open Door guy.
Yep.
Now that viewpoint changes a little bit. He's no longer just the Open Door guy. He's got a second pick. Is he going to eventually have a third pick? Is he eventually just becoming like a meme stock guy? He's always said, he's a cult stock guy. He's on Open Door. He's outside Drake's house. So I think the market is somewhat concerned that Eric Jackson is all of a sudden, going on to other stocks. Does that mean the Open Door story is over here? I don't know. That's to be determined here. But I don't think it was good for Open Door. And I don't think the Open Door extreme weakness that we saw yesterday and last night is a coincidence. So I think at this point in time, it seems like BETR and Open Door, the BETR definitely, the big pop in that, took some money out and some wind out of the sales of Open Door. So even if you're not trading BETR, know that yesterday's Open Door weakness was because Eric Jackson was tweeting about a new stock. So and last night, Open Door really got killed. Like, bring up that Open Door chart. We can go back to BETR in a second. But if you go back to that Open Door chart, holy cow. Last night, this got down to $7. Like, that is like, it went from 9:30 to 7 in a day. Now, it has bounced and come off that. But to be honest, like, from my technical, I don't have a position in it. I think rallies are to be sold in this right now, because I'm concerned also that now Eric Jackson is going to be promoting other stocks. So he's not just maybe going to just be giving all of his time to Open Door. So
there you go.
that's a little bit of the concern. And then I got to think about catalysts here too. What's the next catalyst for Open Door? They've changed management. Eric Jackson's done an amazing job of getting everybody back on board and revamping this company and turning it around. So props to him for doing that. But I got to think about what's the catalyst to take us going forward now. So I know people think it's going to $82. It's $8.20. So for it to go up 10 times from here, it's going to take a lot of new catalysts here. I'm having trouble envisioning that. I think 10 is a short-term top for this. Maybe eventually it finds its way. But Eric Jackson starting to spread and move into other stocks is not a good thing for Open Door.
And just, the sentiment that you were just hinting at there, I'll just say it, the devil's advocate here, did Eric Jackson already do a lot of what he wanted to do at Open Door? And so maybe he is sort of like comfortable moving along. And I'm not saying that's the case or anything, but I know that there are bulls out there who would argue that. And the fact that he's moving on might be a good thing. Not necessarily what I believe.
Door.
But
I don't think any of this BETR thing is good for Open Door. Because again, he was seen as a one trick, like this is my stock. I'm focused on this company. I'm going to do everything in my power to take this to $82. Now all of a sudden he's introduced a new stock pick. So it sounds to me like, now all your attention isn't going to be on Open Door. Now are you starting to move on? You're going to have another stock pick after that, another stock pick after that. Then that becomes something completely different from what a lot of people were viewing Eric Jackson as. So I don't know where he's going. We can't read his mind, obviously. We can bring him on the show and ask him again. And I think it would be, a good, but if I was an Open Door shareholder, I would be concerned about this. So because this has been the Eric Jackson rally from 50 cents to $10, which is incredibly impressive. And it has been an impressive move. But now with the new stock in town, the new toy, the new shiny toy, BETR, it's up 25% here this morning. I think we got to start thinking that there's probably some profit taking happening in Open Door. That's what you saw last night. We have bounced from 702 last night up to 818. I actually think it's a selling opportunity here this morning. So if I'm on the record here, I think 818 is more of a sell than a buy today. That's my opinion. I didn't
have my chart up there. Let me just pull it up. We'll just take a quick look. Dennis, I want to move to one of the themes that has been maybe, if not the hottest, but probably one of the hottest. We have some price action in IONQ here this morning. The company issued a press release. You can see in this bar right here, it was at 7:05 a.m. this morning. IONQ achieves significant quantum internet milestone, demonstrates quantum frequency conversion to telecom wavelengths. This news item is essentially about IONQ being able to use quantum computing to access the telecom/internet wavelength, and we are up about 4% on IONQ. Is this moving other names in the quantum space like an RGTI? Yeah, it looks like it is. Maybe like a QBTS, maybe a little bit less. We know that QUBT had some extreme price action yesterday. Is that one responding here this morning? Yeah, it might be. The whole space is kind of moving on this IONQ news from this morning.
Big move here. The quantum space is just hot, hot, hot. We get an offering over the weekend on QUBT. Stock trades down basically to its offering price. I think it was 1860. I think it traded down to 1840 and bounced right off of it. And that offering brought down the quantum stocks all yesterday morning. All of those stocks were just bought immediately here. QBTS right back up to the highs. IONQ obviously making new highs. RGTI bought right back up to the highs here again. So quantum theme is just hot. Like I said, I think the technology is real. I'm just not sure about the timing of it. I've been playing it through IBM, which has been pretty darn good as well, but it's a conservative way to play it because it's obviously one little piece of IBM. You want the full way to play it? The IONQ, which the CEO was on Mad Money last night and said that they are the best in breed. He said we are the Nvidia of the quantum world. That's what he said last night. I'm not saying that myself. I'm saying that's what the CEO said. So he believes that they are the player in quantum, IONQ. Christian Fromhertz brought us a stock. Hey, Christian. He brought us this stock a long time ago. IONQ. Christian's been all over this play as well. So I'm not going to argue with the quantum theme. I think it's real. I think dips probably continue to get bought here. I think these stocks could actually go higher.
Triple D, I want to take a quick pause. We do have a few more topics. We got about 15 minutes left in the show. I do want to take a quick pause and say thank you to our sponsor for the show. This show is brought to you by Hive Digital Technologies, a global leader in green powered data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly half a gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. Scan the QR code on screen right now, or there is a link in the description of this YouTube video to learn more about Hive. Thanks again, Hive, for sponsoring Pre-Market Prep. You want to pull up the Hive chart, Triple D? You want to keep it rolling
you can
here?
pull up the Hive chart. We should just talk, this is a little crypto segment of the day here too. I mean, everybody wants to talk Ethereum here, and if you want to bring it up, we could do a technical on some of the stuff here,
sure.
like ETHE, for instance. It's Grayscale Ethereum Trust here. ETF kind of broke down a bit yesterday. Ethereum was a bit weaker yesterday. BMNR, I believe, is the Bitmine. That's the one that's playing. It's the Ethereum, right? BMNR.
I believe so. Yeah.
Stuff that they're loaded up with Ethereum. Yeah. So this is Tommy Lee's BMNR. That had the offering yesterday. Traded down. Was down at 55. We were playing this last night in the STN room, thinking it could bounce, which it did overnight. It's up to 56. I think, dips probably continue to get bought here as well. I don't think this Ethereum theme is going away. I also don't think it's a bad thing for crypto that interest rates are going down. So why? Because interest rates, when you're in cash, you get paid. When you're in Ethereum stuff, there's ways they can figure it out and stuff, but they're not interest-bearing securities here. So I do think interest rates going down is good for crypto. I think we're in a bull market here in everything, and I think dips to be bought on Ethereum and Bitcoin.
We talked about an earnings play upcoming tonight, Micron, but we did also get some earnings over the night this morning. I believe it was Autozone. Autozone coming out here. I'll pull up the chart. Autozone reporting what looked like a miss. I see earnings of $48.71 versus about a $51 estimate from analysts. Sales also missed, a slight miss here, $6.242 billion versus $6.245 billion. Same store sales up about 5%. Domestic same store sales up about just under 5%. Not really. They did miss, but I mean, I don't know how low the bar was here, but AutoZone shares still trading down more than 3% on this earnings report this morning.
Yeah, down $100. It's odd lot. It's a hard stock to trade at $4,000. I was talking about this in the STN room here too. It's one they just don't trade because it's wide. I mean, we're looking here this morning. It's $4,020 to $4,035, 15 points wide. Now it gives a $4,000 stock, but these things are just difficult to trade when they're that wide. And it's a lot of off-exchange market making happening in these things because of the wide spreads, which makes it more difficult to get filled on the bid and the offer. Technically speaking here, AutoZone has been one of the, if not the best of breed here. We obviously always talk with the three, AutoZone, O'Reilly, and Advanced Auto Parts. Advanced Auto Parts has been the dog of the group for years. O'Reilly and AutoZone have both been awesome. It's a pullback. They usually get bought. $4,000 is a logical spot for defined buyers. Let's see what happens there.
All right. Our crazy mover of the day, Triple D, was SLE.
That was the one last night. That thing was crazy. And we're at this point here, and this is a little bit bubblicious when we have these ridiculous algo pops on these headlines here. But SLE last night comes out. We were covering this live in the STN room as well. At 4:35, they come out. They were pioneering a digital asset treasury investor Evo fund to invest in Super League, positioning the company to increase shareholder value and satisfy NASDAQ shareholder requirements. So I don't know what any of all that means, but you just mentioned, digital assets, and the algos go nuts. They get all antsy in their pantsy and they can't stop buying here. And that's where we are right now. Stocks traded 16 million shares this morning, went from 3 to 4 to 5 to 6 to 7 to 8 to 9 to 10 last night. It's peeled off the highs a little bit here. I actually got to 13 in the pre-market. So 4 a.m. traders out there just chasing again. Remember, I traded 4 a.m. for a lot of years very successfully. I don't do it anymore because I'm too tired. I'm too old for it. But if you have the energy to get up at 4 a.m., the one thing you do not want to do at 4 a.m. is chase moves. The contrarian wins at 4 a.m. How do I know? I made a lot of money fading stock moves, stupid stock moves at 4 a.m. And now they can do them at midnight, 1. That didn't exist years ago, but you can do it all the time. $13.97. People who are buying that are just pure stupid. Fade dumb money. That is dumb money there, folks. You cannot chase things just relentlessly here. The person buying at $13.97 thinks going to 15, 20, I'm going to get rich. Now you're going to get poor. You just lost half your money in literally 6 hours. That's impressive. That's as dumb as it gets. So what I'm telling you, folks, is chasing works to a certain extent, but when you get like just out of the realm of realism here, taking a $3 stock to $13, hoping it's going to go to 50, most of the stocks come back in.
All right, let's shift over to ratings land here. We got about 10 minutes left in the show or so. We had a few notable ratings here this morning we want to touch on. I'll let you take your pick on which one we go first. Triple D. We can go Lulu downgrade, we can go J&J upgrade, or we can talk about a couple upgrades in CoreWeave ahead of the lockup expiration, the IPO lockup expiration tomorrow.
Let's cover CoreWeave first.
Okay, cool.
And then we'll do Lulu. I have strong opinions on both of these. I've been playing CoreWeave from the long side here for a while. On the chat, I've been buying on the weekends. I've been buying, and pulling back into buying and selling, just playing and trading it from the long side. It's been fantastic. I made the call. Double bottom was in place at 85. It did breach it down to 84.40, breached it by 50 cents, and then it's just been off to the races ever since. We've also been playing this through CORZ, which is obviously being taken over by CoreWeave and chases. I'm long CORZ right now, but working out, and I've been just trading it in and out, in and out, in and out. Been fantastic trading vehicles here. I do think the CoreWeave, you got a couple upgrades here today, starting to get a little bit long in the tooth. I think it could get up to like 140. I think that's a logical place. The issue we have with CoreWeave here is the lockup expiring tomorrow.
Tomorrow, yeah, it's
tomorrow?
180 days. It's 180 days, and the issue went public on March 24th, I think. Did I do the math right there? I believe our expiration is tomorrow, yeah. And what does that? So what does the IPO lockup expiration mean, Triple D, for an investor for a long?
It means that like insiders are allowed to actually come in and start selling stock. So a lot of times what you see is all of a sudden you have a whole new realm of sellers. People who were in this thing and couldn't sell, can now sell. So you get a whole new wave of selling. Doesn't always materialize. Sometimes the story can just keep carrying it. It can absorb some of that selling, but you will have more selling pressure from insiders once this lockup expiration is gone. I don't have confirmation on this, full confirmation, but you're doing the math. 180 days sounds to me like it's tomorrow. So if you guys can verify in the chat too, that is an issue. So I think if you've been long this thing and riding it from 85 to 140, it's probably more of a time to ring the register here now. So on CRWB. So I'm kind of turning not bearish, but I'm now at a neutral standpoint. I'd be ringing the register on CoreWeave.
And just to say that when we're talking about insiders and IPO, this doesn't mean like, managers and executives. This could be anybody that was just able to get in the shares. Like what I'm saying is insiders here that might be selling tomorrow on the lockup, they might not have a close attachment to the company itself. You might say, oh, an insider, why would they sell after their IPO? But not everyone that would be potentially selling tomorrow is so close to the company that they would be concerned with, like, oh my gosh, I'm selling my baby away here. So, we do usually look out. We do usually look ahead for some potential selling pressure on these lockup expirations. And then Triple D, I wanted to ask, do you remember who the two upgrades were for CoreWeave? What firms or analysts?
It was, yes. Let me just go grab
one. Was Melius. Is that right? And then who was the other one?
And Wells Fargo.
Okay, Wells Fargo.
I think these are both Johnny come lately to the party.
Sure.
I think they're both late, way late.
Sure.
We were all over. We've been all over this for 2 weeks in the STN room. Stocks went from 85 to 137. It's up like 60% 2 weeks. Now you're upgrading it. We're selling to you.
Johnny come lately. Let's do J&J next. Triple D. J&J got an upgrade by Guggenheim. Did they upgrade it to the equivalent of a buy? Do you remember?
Yeah, they did. They went up to buy. I bought this last night. I've already flipped it out. I don't expect much from Johnson & Johnson. It's not one that's really a sexy story. It's got all kinds of resistance, 177 to 180. I don't think this is one that ignites. One that's more interesting to me is Lululemon, because Lululemon getting downgraded here today. Also, Ryan Craver was kind of like, oh, I'm thinking about nibbling. I've been thinking about nibbling too, and I've been playing this from the long side here in the STN room, just as trades, overnight trades for a while. I didn't do it last night, but I'm thinking about actually buying the dip here this morning. Like, I think it's downgraded, so I think, you know, we look at yesterday's trading action. The stock went straight down from 170 to 165, like in like 5 minutes off the bat. That dip got heavily bought. And, you know, stock ended up closing at the highs. I think the same thing could happen. I think you get a little bit of like a sell-off, couple points on this downgrade here. I think the dip gets bought here again. So I actually think I'm a buyer of dips in Lululemon here now, at least from a trading perspective. I'm full on buy the dip camp on Lululemon.
Triple D, I just want to did you have any other ratings, Triple D, that you had on your radar? Those were kind of like the 2 or 3 that we jotted down, 3 or 4 that we jotted down from this morning.
No, I think that's it. One stock I do want to talk about is Boeing, and Boeing is having a hell of a morning. And if you're wondering why Boeing is up so much, yeah, you know, there's some, you know, news here on some remedies and bid for EU approval for Spirit deal. Bloomberg, you know, had a headline here. That's not your catalyst. Your catalyst is Jim Cramer. Last night, Jim Cramer promoted Boeing, had a whole segment on it to buy it now. It's his new pick in his club, and he was saying to buy it now. And Boeing went from 212 on that segment to 215 last night on Jim Cramer. Continued to go up overnight, hit 220. Again, 4 a.m. traders, you know, they're crazy and fancy and they're pantsy. It's come back off. But he is a catalyst. It's like an upgrade. When Jim Cramer gets a full-on, like, he talks the stock. But when he stops, it does a whole segment on why he's buying a stock, and it's kind of a contrarian pick like Boeing is. Everybody listens. So it's like Jim Cramer upgraded Boeing here last night, and that is your catalyst here this morning. So does that have gas? Does it have gas to continue? That remains to be seen, but there was some money made last night. Stock has moved up. So we'll go Boeing upgraded by Jim Cramer last night on Mad Money. That is a rating here, in my opinion.
I would argue in this environment, in this market, might be more impactful than a sell-side research firm upgrading a stock.
He is very impactful. He is a huge audience. And again, because he waters down, like he says so many stocks. So if you watch a Mad Money segment, he's got 100 buys, you know, and a few sells, you know, and they're all momentum plays. Jim Cramer is your classic momentum trader. Stock is going up, he's bullish. Stock is going down, he's bearish. This is a contrarian call. The stock has been going straight down. So that stands out. And that is why, you know, this is more of a mover off a Jim Cramer effect than, you know, maybe some other stocks. So, I mean, I watched it last night. It was 212, and he teased that he was going to pitch it, started getting bought up, and then it ran on the pitch. So, you know, I'm not making it up. The price action, you know, right on the segment. So it went up to 215 and then continued on into the night. So I think people like this story. I think people want an excuse to buy Boeing. This could be a catalyst to ignite it here. So I think probably Jim Cramer just put in a short-term bottom in Boeing. You're buying at 217 this morning to be at 220 to 225. You're waiting it for 215. It all depends. But I think 211 is going to be the short-term bottom here in Boeing. So I like it too.
Dennis, I want to just preview a couple of things that we got for today. Just a few heads up. We are going to have Fed member Boeing speaking in just a minute or two here around 9 a.m. We are going to be getting S&P Global Manufacturing PMI indices at 9:45 a.m. We're going to be getting Trump speaking also around 9:45 a.m. We're going to be getting Fed member Bostic speaking at 10 a.m. We're going to be Richmond Manufacturing index at 10 a.m. We're going to be getting Fed Chair Powell speaking for the first time at 12:35 p.m. Eastern time today. First time since the rate decision. And then Trump is also scheduled to speak a little bit later tonight around 7 p.m. I like investing.com's econ calendar. Got all of that info from investing.com's econ calendar, a good free resource. Also, just a couple sort of little housekeeping things here before I ask you for your final thoughts. Folks, we are doing more content on YouTube recently. We've been doing shorts. We've been doing little short videos. If you aren't tuned in, if you aren't subscribed to the Pre-Market Prep YouTube channel, give us a subscription here. You can tune in and hear some little snippets. Triple D saying some good little knowledge, some good little wisdom. Maybe Joel giving a nice little technical. You can get a nice little recap there on our YouTube channel, Pre-Market Prep. Triple D, we're going to go over here to STN in just a sec. But first, want to just ask you for any closing/final thoughts before we wrap here.
I think the chip rally was for real yesterday. I'd be looking at buying dips on chips, including Nvidia here. I'm long it, but from a trading perspective, I think Tesla running under the radar here and continues to go higher. Still long Tesla in the long-term account. It seems like this is the ultimate overnight trade lately. Like it just seems like it's up every morning. Like I know sometimes it leaks intraday and gives some of it back, but man, if you're just playing this from the long side of the overnight trades, you've been killing, especially through the weekend.
All right, Triple D and I are going to jump over to the SCN room. We're going to talk about what's driving the market today, maybe take a look at some imbalances for the morning. We'll learn about some of Dennis's overnight trades, and then we'll get you set up for the opening bell in about a half hour. Thanks for tuning in to Pre-Market Prep here this morning, folks. We'll be back bright and early with you tomorrow morning.